The head and shoulders pattern is a widely recognized and often reliable chart formation in technical analysis, frequently used to predict trend reversals, particularly in volatile markets like Bitcoin. Here's a breakdown of what it is, how to identify it, its bearish implications, and how it can be traded. What is a head and shoulders pattern? It's a bearish reversal pattern that typically appears after an uptrend, signaling that an upward trend is likely nearing its end, and a downtrend may begin. The pattern visually resembles a human head with two shoulders, hence the name. It consists of four main components. Asterisk left shoulder. The price rises to a peak and then declines, forming the first shoulder. Asterisk head. The price rises again to a significantly higher peak than the left shoulder, and then declines back down. This forms the head. Asterisk right shoulder. The price rises a third time, but this peak is lower than the head and typically similar in height to the left shoulder. It then declines again. Asterisk neckline. This is a support level drawn by connecting the lowest points troughs that occur after the left shoulder and the head. It can be horizontal, sloping upwards or sloping downwards. How to identify a head and shoulders pattern in BTC. Asterisk prior uptrend. The pattern must be preceded by a clear uptrend in Bitcoin's price. Asterisk 3 peaks. Look for 3 distinct peaks. The middle peak, the head, should be the highest, and the 2 outer peaks, the shoulders, should be roughly similar in height, although they don't have to be perfectly symmetrical. Asterisk pullbacks troughs. Observe the pullbacks troughs between the peaks. These points are crucial for drawing the neckline. Asterisk neckline confirmation. Draw a line connecting the lows of the troughs between the left shoulder and the head, and between the head and the right shoulder. This line is the neckline. Bearish implications of a head and shoulders pattern in Bitcoin. The head and shoulders pattern signals a potential shift in market psychology. Asterisk weakening bullish momentum. The left shoulder shows strong buying, but the subsequent decline hints at some selling pressure. Asterisk peak of optimism, the head. The head represents the highest point of the uptrend, where buyers might have been most aggressive. However, the drop after the head suggests that sellers are gaining strength. Asterisk buyer exhaustion right shoulder. The right shoulder, being lower than the head, indicates that buyers are losing their ability to push the price higher. They are exhausted, and sellers are taking control. Asterisk neckline breakout. The most significant bearish implication comes when Bitcoin's price breaks below the neckline. This breakout confirms the pattern and typically signals the start of a new downtrend. The neckline, which was previously a support level, often acts as a resistance level if the price attempts to retest it from below. Asterisk price target. Traders often calculate a potential price target for the downtrend by measuring the vertical distance from the top of the head to the neckline and projecting that distance downwards from the point where the price breaks the neckline. How to trade a Bitcoin head and shoulders pattern. Asterisk identify the pattern. Clearly define the left shoulder, head, right shoulder, and neckline. Asterisk wait for confirmation, neckline breakout. Do not enter a trade before the price decisively breaks below the neckline. A strong close below the neckline, especially on higher volume, provides stronger confirmation. Asterisk entry point. Asterisk aggressive entry. Enter a short position immediately after a confirmed breakout below the neckline. Asterisk conservative entry. Wait for a retest of the neckline, where the price pulls back to the broken neckline, which now acts as resistance, and then rejects it before continuing lower. This offers a potentially lower risk entry. Asterisk stop loss placement. Place a stop loss order above the right shoulder.